Hi, my name is John Dowdy, and I'd like to give you a quick review of the stock market for the weekend in August 30th, 2013. Last week, the market broke down below support, so is now in a short-term bearish trend. Where do we go from here? That's what we'll discuss in this video. And if you'd like more data, then please come to my website, www.superchargedretirementIncome.com. Okay, this is a chart of SPY, which is the ETF for the S&P 500. And before we actually get into the video, let me just say that this commentary is based on technical analysis, which is the analysis of charts. And some people believe technical analysis works, some people don't. I believe it does work over the short term in some cases, and if you'd like to know why, then I've written a post on my website that's free. So please come take a look if you'd like. Now this chart, we show the 50-day moving average and the 200-day moving average. 50 days in red, 200s in blue. We also show a channel which has been in effect since last November, and it's pretty much contained the market within this channel, except it went above it a little bit in May, went below some in June, and now it has broken back below the channel lines. It has also broken below the red line, the 50-day moving average, which is currently at 166. So we closed at 163.65. 50-day moving average is 166. In order for the bull to get healthy, we're going to have to move back above the 50-day. This chart shows some key support and resistance levels. 169 will be resistance. That was the previous high back in May. Also, the all-time high at 171 will be very strong resistance. But first, as I said, we're going to have to move above 166, which is 50-day. Down below, we really have one area of very strong resistance now. That's between 155 and 156. 155 was the June low, and 156 is the 200-day moving average. So this area should be very strong support. Let's zoom in now and see if we can glean what may be going on. This is the same chart as previously, but zoomed in. And as you can see, last week we started out okay with the market moving above the 50-day moving average. That was on Monday. But Tuesday we had a major breakdown and moved down all the way down to 163. Since Tuesday, Wednesday, Thursday, and Friday, we've had some consolidation. This is usually called a bear flag. But as you can see, the path of least resistance is down. We're making lower lows. So if we had to guess, we would say the next big move of the market will likely be down to major support here at 155 to 156. In order for the bull to regain control, is going to have to move above the 166 level. That's the first level of resistance, and then all the way up here to 171 would be the if it moves above 171, then the market is very healthy again, and will be moving higher for some time in the future. But until that happens, we need to keep a close eye on the market to see if it breaks down further next week, or if it does try a bounce and move above the 50-day. So summary, the bear is taking control, at least in the short term. And as we've been saying, we must move above the 166 level in order for the bull to regain control. Path of least resistance is lower, maybe down to 155, 156 level. If the market does not hold here at the 155 to 156, then we could be looking at a much larger correction. So if you're bullish, then I would advise caution until we can see the market actually bounce. So we'll keep a close eye next week to see what's happening. Okay, a legal disclaimer. The views that I've been giving you are mine and strictly mine. They're not to be construed as investment advice or any offer to buy or sell securities. You and only you are responsible for your investment decisions, and you should do your own due diligence. Investments, of course, involves loss of risk, and past performance does not indicate future profits. So good luck next week. Let's keep a close eye on the market to see what happens. Thanks for viewing, and as I said, if you'd like more data, please come to my website, www.superchargedretirementIncome.com. Thanks.